Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we were in our live trade room Thursday morning. So some of these levels may look a bit new to you as we are maybe changing a bit of direction. We saw a week full of slowing momentum in our S&P and NASDAQ markets, and now we're coming the other way. And then same thing with our currency markets. We were chopping sideways and now coming down a bit. Now, whenever we have that happen, we typically find that we get stopped out for a few small losses, and then we have a couple of things that start to work in the other direction for us. And that's really where following the trend becomes pretty helpful. So let's go ahead and get into it and dive in. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell. If you're a regular returning member, just leave a comment down below. Great to always have comments. Let me know how you're progressing through this week where we had a little bit of sideways price action as we head into the weekend. All right, S&P down 11 points this morning, and we can see that we'd had this area that was resistance that we bounced our head off of a couple of times, and we're looking at a potential breakout in this region. However, knowing that in our 4 hour, we didn't really have a quality area of supply. Now, we did have a demand area down below us in the 1 hour, and that demand area was a confirmation entry because we came really close to getting filled on it and were unable to do so. So with the closeness of that level, we put this in as a confirmation trade, and price just popped right through it. Now, interestingly enough, is that level now is acting as a little bit of supply. So let's see if price continues to carry down from here and this becomes a little bit of a flip area. So I wasn't overly sold on this level yesterday, especially after the very, very close entry. And now I think it could help to work the other way and bring us down. Now below us, we've got a little bit of an area that's a level on top of a level above this area here of former area of resistance, now acting as potential support. If this level's too wide for you and you've just got to take one, I think the lower one might be the way to go. So if I just take the lower level, it's just going to look like this area here, 2880 by 2873. Looking at the NASDAQ, very similar picture where we had that confirmation entry in here. As price just popped right through there. Now, we did have a level here that I thought could have acted as a potential breakdown, but this was back the other day after our breakout to the upside. This was our upside long, which I know a lot of people were able to take part of, and now it's kind of hammering back down. So we didn't get any basing in front of there. So we would need a different opportunity as a way to get in. Now, yesterday we were looking at this area here saying, hey, if we get basing directly in front of this, we can have a long, and this is why you've got to look for basing directly in front of a level. We didn't get it here, right? Price just came right up into there. And so next thing that I want to do is say, all right, well, my big picture trend, if I look at the 4 hour, hasn't really changed. We're just getting a little bit of a pullback here, and we're pulled back to below this controlling pivot. So in pulling back to below this controlling pivot, I think we may come down for a little bit, and possibly most of the day today, or at least a good part of the day today. And if we do, you've got some demand down below you as areas to get long again. There's this little area here, which we've come close to and been unable to reach. And so from a supply side area, I've got some potential areas up above me here. If we go, I've got this level here, but I just don't love the time of day. The time of day really shakes me off of that. Because remember, I'm combining a poor time of day with a counter trend trade, right? So it's lower probability. If it fits your rules and you're willing to do it, then I think it's okay. But I'm not. I don't want to trade against my rules, which is I really don't want to look at bad time of the day and the combination of bad time of the day combined with counter trend. All right, moving over to crude oil. So in crude oil, yesterday we were looking at this crude oil level, and crude oil came up to our 15-minute level, and we smoked off of there super, super hard. That was a really, really nice trade, a nice setup from this 34 level all the way down. Now, this is the June contract. So if you weren't trading the June contract, we've got to go look at the September contract, because that's the one that we've been analyzing the most. But for a lot of people that are still trading, the July contract, a lot of people trading the July contract, you are getting a nice move off of there. But looking at the September, which is the one that I've been analyzing, we have come up into this area of resistance, and we did not get a clean break out of that level. When we were looking at it yesterday, we were looking for, where are we going to get that super clean break. While we were in class, we looked up here, and we just didn't get a super clean break as of yet. Now, I was looking at potential reversal right here for a demand. That just cut right through like a knife through butter. That one did not hold, so that was a small little stop out there. However, my level down below was significantly better, and that was just a very quick touch and go. Now, this was a touch and go into a European market open. We love those London market open times a day, and then that rallied out of there for a good 3-to-1 reward to risk. Now, it hasn't done a lot since then, and in not doing a lot since that move down, I think that we could be stalling out. So if you took that long, I would take some money off the table immediately, because I think that the next time we come into here, I need to remove that level. So if you took that long, pull some money off the table, as I think we're coming back down. Now, this candle-to-candle area that I have marked right here, I have this marked because it's not a phenomenal demand zone, but it was a big move. It was a pretty clean area in the midst of this very strong rally up. Now, our 4-hour chart shows me I have a lower swing low and a lower swing high. So it actually tells me that I'm okay if I want to look at a potential short. All right. It gives me the opportunity to say, shorts may make sense in this market. So if you're interested in going short, this would be the place to do so up above us. Now, up above us, it would be this wick over wick level right here. But once again, fairly poor time of the day that it was created up there. Combine that with all these high upper wicks tells me there's a lot of selling pressure inside of this region. So I'm going to say that we're probably going to get a decent breakdown opportunity. And you might get a breakdown opportunity just below this line here, which is similar to where I had a breakdown line set up before. The difference is that we didn't give any basing in front of it, and now I'm getting a bit of basing. So you may still get a short opportunity in here to come down. Gold, we are in gold. We've been fairly range bound on our 4-hour chart of gold. We looked yesterday at a really, really nice iron condor between 1,700 and 1,800. So for those of you that trade options on futures, gold was paying a really nice premium on an 8-day iron condor yesterday. And so, if you did get into that, then it's definitely the bullish side is looking really good. The bearish side still scares me a bit, but we've got some room above that. But as far as reversal trades in between here, we're getting a nice candle-to-candle trade setup right here. This is the kind of setup you look up for a candle-to-candle. You have a reversal candlestick pattern, like in this case, it's a shooting star, followed by the opportunity to get in and move your stop down almost immediately. This is a very clean candle-to-candle setup. So, might be worth continuing to allow that one to run down a bit lower. But other than that, I don't have a whole lot. There is some demand here, but once again, not a great time of day. So I'm not really going to add a whole lot to this one. I think this one might be better to look at on the weekend. Next, looking at bonds and currency markets. So in our ZN, we are still in the same boat we've been in for, I don't know, feels like a month now. Actually, it's been a month now since our the 22nd of April. We've been in this tight band for about a month, and I'm just not going to force that. I just don't see a reason to force a trade out of that kind of a level. Even when I go to a 15-minute level, I don't see a whole bunch of strong reversal candidate trades in here. Sure, there's been a few demand areas that prices have retested, and so if that's the case, and we really want to look a bit deeper, there's some levels down in here, but for now, I'm just not going to add anything to the list. In the Aussie, so in the Aussie, we had a confirmation short, or confirmation long right here, but we did come down from that area. So We've now put in some lower swing lows and lower swing highs. Even when I go to the 4-hour, we see that we've got a little bit lower there. So I think there could be a chance for price to continue to come down a bit more. And when I look at this hourly chart, we've had a nice little rally here in the last little bit, but there's some selling pressure. So it could be a good area up here to do that candle-to-candle style. So look for a candle-to-candle potential opportunity for an entry right in here. Next, the euro. So in our euro, we did come down into our 15-minute area of demand and get a nice little rally off of there for about a 2-to-1, and then it just kind of petered out. So if you use the 6-candle rule, you realized it was well past 6 candles. The price hadn't gone anywhere. And then look at this. Once we broke through it, kaboosh. I don't even know if that's a real word. Kaboosh. I just made it. Price came hammering down through there. I will say that we have a little bit of supply right here, and then there's also a little bit right in here. So there's two little areas of supply up above us where we could see a reversal that's right around the London Open. So keep an eye on that one. The Canadian dollar. So Canadian dollar, I did think that we had a nice little wick over wick area here, which was also resistance here in the past, that we would get a bit of a turning point. Price came into that in the overnight. So if you don't trade the overnight, you may not have gotten into this trade. And if you didn't get into it, whew, if you did get into it, sorry. 1, 2, 3, 4, 5. We're 6 candles in. You know, your stop would have to go below this. The tightest would be below this wick, and more likely underneath this one. And so you're probably not stopped out yet, but you should probably not be in the trade any longer, as it looks to be reversing and continuing to head back down. Now, why are all these currencies heading down? Because we're getting strength in the dollar, right? Strength in the dollar will cause those currencies to fall. And so now you could be looking at another candle-to-candle opportunity in this one as well. Great British Pound, Japanese Yen, as we look at our final two currency markets heading into the week. And Great British Pound, we had looked at yesterday a potential breakdown right in here, and we did get a bit of a breakdown below there, but then it popped right back up, and then down, and then up, and then down, and then basically 6 candles later, it had gone nowhere. Didn't really give us a good stop out, but it definitely didn't go anywhere. Well, now we're sitting right above a potential area of demand. Didn't get in, which means that potential area of demand is probably not going to work, because we're basing immediately before the level, right? I mean, we're basing right in front of the level. I can't even switch to a confirmation trade. So now I'll put a little potential breakout opportunity here. Actually, I've got to make it a bit lower. I'd still want to see a bit more basing, and I'm taking the bottom of this wick here. I'd still like to see a bit more basing in this region, but I think price can come down from here a bit lower, at least into this 1.21 area. Japanese yen, we are in between our areas of support and resistance. I've got no clean areas of either supply or demand. And so remember, you know, we don't use support and resistance exclusively. We don't use supply and demand exclusively. We use fair price value areas, which encompasses many of those similar things. By the way, we have a master class coming out on fair price value areas that's going to be good for anybody to watch. So keep an eye out for that one, where we talk about what are some of the differences in support and resistance, supply, demand, and fair price value areas. Hopefully you'll find that to be a very valuable online session. So that's all I have for today. Remember that it is Friday, and heading into any weekend, you have to know that you've got the risk of gaps. It's not just a weekend, it's a holiday weekend. And so gap risk is real. So keep an eye on some levels as you take a look at it. If you got any questions, as always, send us an email, support@tradersarmy.com. I will talk to you soon. See you.